Good day, ladies and gentlemen. Once again, another opportunity to hear my voice recording on Chapter 7 of Accounting on the topic called Property, Plant and Equipment, focusing on significant parts, the damage of the significant parts or significant part, and the derecognition of the significant part. There is also another recording that covers also this part, but this one is more detailed than the first or previous recording that I did, which was example 10.1. Now, I always prefer to begin with the requirements and know what is required before I read the information that relates to the requirements. Show all related journal entries during the year ended 31st of December 2001. So now we are recording journal entries that occurred during the year that ended by the 31st of December 2001. So all the journal entries that took place during this year. It says Savior Limited owned a car that had carrying amount of 30,000 rands on the 1st of January 2001. So now if you look at this car, we are not given the cost price of the car, but we are given the carrying amount of the car. And this carrying amount is made of two significant parts. Is made of two significant parts that are given to us in carrying values or carrying amounts as follows. So now this 30,000 rands is made of the carrying amount of the car body, and the carrying amount of the car body is 20,000 rands. Then we also do have the engine of this car with the carrying amount of 10,000 rands. So now these are the two carrying amounts for the two significant parts of this car. Now it is very important to note the fact that we don't know the year this asset was bought, but we know that when this asset was bought and two significant parts were identified, it might be 2 years back, 3 years back, or a year ago. We are not informed of such information. But we know that when this car was bought, we had car body on the debit side. This is what was done. We debited car body on the debit side, and we debited car engine when this asset was bought. Then we credited bank, which is the method in which this asset was bought, or else payables. Then we recorded the cost of these significant components and their total cost. But we are not busy with that information now, meaning this asset has been captured and recorded correctly at initial date, meaning when it was bought. We are not in the year it was bought, but we are now in the year 2001. We are concerned about the journal entries that took place in the year 2001. The recognition of the asset was done, recognized well in the books of the business. So we are therefore told that the carrying amount of the car body, which is included in that 30,000 rands, I want to highlight that, has a remaining useful life of 10 years. And it's very important to say that they did not give us the cost price, but they gave us the remaining useful life. Now, when you are given the carrying amount, the only way to calculate your depreciation with the remaining useful life, you say the carrying amount of the asset divide by the remaining useful life of the asset, then you get to the depreciation. That is how you calculate depreciation when you are given the carrying amount of the asset. You must look for the remaining useful life, unless you can be given depreciation of 2 years, but that is a future topics, where then you compare the carrying amounts, then the difference between carrying amount of the beginning of the year and carrying amount at the end of the year becomes the depreciation. So now let us continue on that same note. So now it means the depreciation of the car body will be 20,000 rands divided by the remaining useful life, which is 10 years. Therefore, now that means the depreciation of the car body will be 2,000 rands. I will also give an example to explain why do we divide by the useful life. So now the depreciation is 2,000 rands. I'll just bring my own random numbers. Let us say we have the cost price of a random asset. We have this asset with the cost price. It can be any asset. The cost price of this asset, let's assume that it is 100,000 rands. And the useful life of this asset, is equal to 10 years. So this is the information we are given. So now that means when we are calculating depreciation for the full year, either we call it full year or year one, depreciation will be calculated by saying 100,000 rands divided by 10. This will give us depreciation of 10,000 rands. Assume this is year one. Now depreciation for the following year, it will not change. It will still be the same 10,000 rands because useful life of 10 years will be on a straight line method. Straight line method, not diminishing balance method. Then now depreciation for year 3, it will be the same calculations. So that means the depreciation for year 3 will be another 10,000 rands. Now let us close in here and we say our total accumulated depreciation after 3 years. Total accumulated depreciation. We can easily say that our total accumulated depreciation will be 30,000 rands. Now let us calculate our carrying amount. We know that carrying amount will be cost price of 100,000 rands minus accumulated depreciation of 30,000 rands that we just calculated. That means the carrying amount will be 70,000 rands. So now this is our carrying amount after 3 years, 70,000 rands. Now if this information was not given to us, or let me leave it first. Now after 3 years, that means year 1 is gone, year 2 is gone, and year 3 is gone. That means the remaining useful life. That means our remaining years equals 7 years. Remaining years is 7 years. Now that why I'm saying 7 years, because year 1, year 2, year 3 are gone. Now the years that are remaining out of the 10 years is only 7 years, meaning this asset is going to be depreciated for the remainder of the 7 years that are left, because we have already depreciated it for the past 3 years. Therefore now, immediately when you are given the carrying amount and the remaining useful life, you can calculate your depreciation using the carrying amount and the depreciation. So our depreciation will be equal to carrying amount of 70,000 rands divided by 7, and this still gives us an amount of 10,000 rands, which is the same depreciation that we've been calculating over the past 3 years on a straight line method. So now this is what I just want to bring across your mind, that when you have carrying amount, you need the remaining useful life to divide the carrying amount with the remaining useful life. That will give you depreciation. So this is also very important to note. Now I also want to bring to your attention the fact that now that we have depreciation, this is depreciation for the 4th year. I want to make that one also clear. This is depreciation for the 4th year. Now, if we want to calculate carrying amount at the end of year 4, carrying amount at the end of year 4, What do? We say carrying amount end of year 4 is equal to carrying amount at the beginning of year or at the end of year 3 minus depreciation of 10,000 rands. Is the carrying amount is equal to carrying amount minus depreciation. So carrying amount is equal to carrying amount minus depreciation. In this case, when you're calculating carrying amount and you are not given the cost price of the asset, you are only given the carrying amount. So you say carrying amount minus depreciation for that year, that will give you carrying amount at the end of the year. Therefore, now that will mean our carrying amount will be equal to 70,000 rands, which is carrying amount beginning of the year, minus depreciation for the current year, which is 10,000 rands. That means our carrying amount will be 60,000 rands. This is carrying amount at the end of year 4. Carrying amount year 4. Don't know why I said C4. Carrying amount end of year 4. That 4 just indicating that is after 4 years. Now this will be 60,000 rands. This is the same thing. Depreciation for year 1, year 2, year 3 and depreciation for year 4 will total to 40,000 rands because each year depreciation is 10,000 rands. Therefore, now if we are given the cost price, we are going to say carrying amount is equal to cost price minus accumulated depreciation. Remember, 40,000 rands is the accumulated depreciation for 4 years. So your carrying amount will be equal to cost price of 100,000 rands minus accumulated depreciation of 40,000 rands. At the end of the day, you get to the same 60,000 rands. So that's what I want to bring across your mind, that you should be able to calculate depreciation when you are given carrying amount and the remaining useful life. And again, you should be able to calculate carrying amount when you are given carrying amount at the beginning of the year and calculated depreciation for the current year. Then is carrying amount minus depreciation is equal to carrying amount at the end of the year. So carrying amount beginning of the year minus depreciation for the year, that gives you carrying amount at the end of the year. At the same time, cost price minus accumulated depreciation gives you carrying amount at the end of the year. Please take note of this, it's very important. It's partly covered also in the recording that I have already done of example 10. But I did not explain all the details in there, so hence I'm doing this question. So now we know that depreciation in here, it is 10,000 rands. That means our carrying amount for the car body, carrying amount will be carrying amount minus depreciation. So now that means it will be carrying amount of 20,000 rands minus 2,000 rands. That means carrying amount at the end of the year 2001, at the end, because this carrying amount is at the beginning. This is at the beginning. So at the end, it will be an amount of 18,000 rands. It will be an amount of 18,000 rands. I don't know why I have 10,000 here, not 2,000 rands. So now that will be, I think it's inspired by the calculation that I just did. 2,000 as depreciation, carrying amount is equal to 18,000 rands. And this is carrying amount on the 31st of December 2001. Then now we come to the second asset. Car engine costs, also the car engine carrying amount is 10,000 rands with the remaining useful life of 2 years. Obviously now we already know that when we're calculating our depreciation for the car engine, depreciation will be 10,000 rands divided by 2. That will mean now the depreciation of the car engine for the full year is 5,000 rands. Now I don't want to be calculating carrying amount of this engine because I know further information that the engine was damaged during the year. So I don't want to be confusing you and having two carrying amounts. but the cupboard was not damaged, is still in there. That carrying amount will be the one that will be calculating as per the requirement at the end of the year. Now it says in the next paragraph that the old engine, which cost 12,000 rands. So now in other words, this engine that has this carrying amount, it costed the company an amount of 12,000 rands, was scrapped during the month of September 2001 and replaced on the 30th of September at a cost of 15,000 rands. And this during late, so this is at the end of September. It's already late September. So now we are given the cost of the engine. We know the cost price. We know the carrying amount beginning of the year. And we also have calculated depreciation for the full year amounting to 5,000 rands. So now if we have up until late September, that means this engine was in the business for 9 months. Remember, the carrying amount that we have is on the 1st of January. So now meaning the engine was there January, February, March, April, May, June, July, August, September for a period of 9 months. Then it was damaged beyond repairs and it was scrapped. When it says scrapped, that means it was not sold, but it was just scrapped, taken and thrown somewhere else as a scrap asset. And it was replaced with a new engine. Now, before we replace with a new engine, we first need to calculate depreciation for 9 months, meaning from January to September. Remember, 9 months is up until the date this asset was damaged. Remember again, all other depreciations for the previous years have already been calculated. All other depreciation up until the 1st of January have already been calculated. How can I prove that? Remember, when we say cost price minus accumulated depreciation, cost price minus accumulated depreciation, it gives us the carrying amount. And note, this is very important also. Now, why I'm bringing this is because, I don't know why is it erasing. Cost price minus accumulated depreciation is equal to carrying amount. Why am I always throwing these equations along the line? Is because there are things that I'm looking for. There are unknowns that I'm looking for. Remember, I'm talking about the accumulated depreciation up until the 1st of January 2001. That has already been recorded. Can we get to know that amount? Yes, because this is the accumulated depreciation. We do have the cost price of the asset. The cost price is 12,000 rands. Here we are given the cost price. We don't know the accumulated depreciation. Let us make the unknown to be X. So let accumulated be X, or let the unknown be X, is equal to carrying amount at the beginning of the year. And we know that our carrying amount at the beginning of the year, it is 10,000 rands. So that means we can calculate X, which is the unknown called accumulated depreciation. How are we going to do that? We are going to say X is equal to 12,000 rands minus carrying amount of 10,000 rands. So that means the accumulated depreciation for this damaged engine on the 1st of January 2001 amounted to an amount of 2,000 rands. So we do know the accumulated depreciation for this engine up until 31st of December 2000. Which becomes opening balance on the 1st of January 2001. So now this is the accumulated depreciation, which is our X in here. This is accumulated depreciation on the 1st of January in the year 2001. Please do write these notes on the side. I prefer to write in here because we can see everything. Now let us continue on that same note. Now that we have calculated our accumulated depreciation, I want to bring this across your mind. Every time the accumulated depreciation, I'm not answering the question now, I'm just still doing the explanation. The accumulated depreciation that I just calculated, remember when it was recorded, they would have said debit depreciation, assuming no errors were done. They debited depreciation by 2,000 rands and they accredited accumulated depreciation. Accumulated depreciation. This is what they said, depreciation. And then obviously they have to specify that this accumulated depreciation is for the engine. So this is what was done. What is done already. This is what is done. We are not recording this journal entry, but I want to bring your attention to this credit entry, which was recorded already. Now, we are not recording this for marks, but it's the accumulated depreciation that was already recorded. Therefore, now, we are in the current year now. What are we supposed to do in the current year? We're supposed to record depreciation for the current year now. Our depreciation for the current year, we calculated it to be 5,000 rands. And we need to multiply the 5,000 rands by 9/12 because we want depreciation from the month of January up until the date this asset was damaged. So now let us check that calculation. We have 5,000 rands times by 9/12. This gives us 3,750. So now we have 3,750 as depreciation of this engine for the year or for the number of months in the year it was damaged. 3,750. So what are we doing? We debit depreciation, then we credit accumulated depreciation for this engine, for the engine of the car. Now, how much are we recording? We are recording 3,750 and we are recording 3,750. Now, we need therefore to know how much then is the carrying amount of this engine at the date it was damaged. That means we need all the depreciations of this engine up until 30th of September, up until late September. So now that means our accumulated depreciation, which is up until the 1st, this is up until the 1st of January 2001, or else up until 31st of December in the year 2000. Remember, closing balance becomes opening balance. It doesn't matter which date are you using. But now this is as at late September, 30th of the 9th month in the year 2009. So our total accumulated depreciation will be 2,000 plus 3,750. Do you see that? So now that will be our total accumulated depreciation, which is 2,000 plus 3,750. That means our total accumulated depreciation will be 5,750. Therefore, now we need to know the carrying amount of this old engine. Carrying amount will be equal to, there are two ways, remember. We can say carrying amount is equal to carrying amount at the beginning minus depreciation will give us carrying amount at the end. So let me first use the first approach. Carrying amount at the beginning, let me say, no carrying amount at the end of the year. Let's not use these 1s and 2 because I'll have to explain them. Carrying amount is equal to carrying amount minus depreciation. Carrying amount is equal to carrying amount at beginning. This is carrying amount at the end that we are calculating, meaning at the end of the month of September. Just to explain further that carrying amount at the beginning minus depreciation for the number of months the asset was in the business is equal to carrying amount at the end of the year. Just to give those details. So now we are looking for the carrying amount at the end. It will be equal to carrying amount at the beginning. Carrying amount of the car engine was 10,000. Depreciation, this is for a period of 9 months. For the current year, the asset was in the business. Is 3,750 that we have just recorded. So now this will give us 10,000 minus 3,750. we have 10,000 minus 3,750. This gives us 6,250. This is the carrying amount late September or by the end of September. So now this is our carrying amount. At the same time, we could have said the normal way that most of us are familiar. Carrying amount is equal to cost price minus accumulated depreciation. And our cost price is 12,000 rands minus accumulated depreciation 5,750. 5,750. I hope you remember where the 5,750 comes from. It is 2,000 of the accumulated plus 3,750 of the depreciation for the 9 months in the current year. So now, therefore, now we go to our calculations. Then we have 5,750 minus 12,000 rands. At the end of the day, we get to the same 6,750 as our carrying value or carrying amount of this engine at the end of September, late September in the year 2001. So either way, we get to the same figures, and I want you not to master only one side that you think is easy or comfortable to you, but master both of them, because information can be given in any of the two methods, and you at certain time will be bound to use a certain method based on the limited information. So please master both of the methods. Now, this is the value of the asset on the date it was damaged. Then now the question is, did we sell this asset and receive some money? The answer is no. The asset was not sold. So now that means the entire value of our asset, meaning the entire asset that had a value of 6,250, that value became a loss. That means we have lost an asset with a value of 6,250. We have lost an asset with a value of 6,250 because of the damages. We did not sell it and get money. We lost the entire value. So now, if that is the case, this entire value is therefore called impairment loss. That is why now we have to record a general journal or journal entry that is called impairment loss. Impairment loss is the carrying amount of the asset if the asset was not sold. Therefore, this will be 6,250 rand. The credit side is very similar to accumulated depreciation. We say accumulated impairment loss. Accumulated impairment loss. Accumulated impairment loss of 6,250. Remember, in this case, the entire carrying amount was lost. The entire value of the asset that had a carrying amount of 6,250 was lost. We did not sell it and recover part of the value. All of it became impairment loss. But if this asset was sold and we sold it maybe for 2,000 rands, if let us say it was sold for 2,000 rands, therefore we were going to say carrying amount minus 2,000 equals impairment loss. So now that is another very important part. I will try to explain after I'm done with these journal entries. Therefore, now after we have recorded the impairment loss, then we can do what is called derecognition of the asset. Derecognition journal entry. So now let us do the derecognition. Derecognition journal. The journal where now we are removing this asset from the books of the business. First thing that we need to remove in combination, we need to remove the accumulated depreciation and the accumulated depreciation of the current year, which amount to 5,750. This is the accumulated depreciation for the previous years, and we add the depreciation of the current year to the accumulated depreciation account. So that means the total accumulated depreciation of this asset is 5,750. And if you see that this accumulated is on the credit side, and this accumulated is on the credit side. So now for us to get rid of that, we need to debit accumulated depreciation. The reason why we are debiting is because accumulated depreciation increases on the credit side, and it was credited all these years. So now accumulated depreciation of the engine, please don't forget to specify the name of the asset. Sometimes I forget, 5,750. Then after, we need to get rid of the accumulated impairment loss. This is another account that we get rid of, accumulated impairment loss. I will explain why do we seem as if we have ignored impairment loss, and I will explain why does this seem as if we have ignored depreciation. Why are we not writing off depreciation? I will explain that one also. Then we have accumulated impairment loss. Accumulated impairment loss of the engine, which is the old engine. It is 6,250. Yes, 6,250, not 6,750. 6,250. Then after, on the credit side, we will have the cost of the engine. Engine at cost. Now we are removing the actual cost of this engine, which was recorded as 12,000 rands. If you remember, we're told that the cost of the engine is 12,000 rands, and there is the 12,000 rands of the cost of this engine. That's where that figure comes from. Now remember, when this asset was bought, we debited, I think I did show you that journal entry, we debited our engine at cost. It was debited by 12,000 rands. So now that we are removing it from the books, we have to credit it, and we already know that the asset is an asset and increases on the debit side. So when we remove it on the credit side. Make sure that your total of your debit equals to the cost of the asset at all times. Now we have removed the old engine. We then need to introduce the new engine. But before that, I just want to bring you to a journal entry that I said I will explain. Now, if, let us say, this engine was sold for 2,000. Let us say it was sold for 2,000 rands. Sold for 2,000 rands. That will mean now our accumulated depreciation will remain the same. It will be 5,750. Then now our accumulated impairment loss will change. It will decrease by the amount we have sold our asset for, plus 2,000 rands. So that will mean now we have to say 6,250 minus 2,000 rands, which is the amount we sold our engine for. So now this will be 4,250. Then now if it was sold for cash, we were going to debit bank of 2,000 rands. So now this amount gets to be divided into the price in which the asset was sold for. It's the same total, but it's divided into the fact that another portion was a cash of it, or sold on credit, which will be receivables. Now we are going to have obviously the engine cost. That is not going to change. Engine at cost, it will be the same 12,000 rands. Let me just throw another entry enclosure in here, which was partly covered at first year level, but we are not focusing on that in this topic. If, let us say, the engine was sold for, now before that, I think I have to highlight on something in here. Therefore now that will mean our impairment loss will move to 4,250. It will change to 4,250 as per our changes that appear in here. So now that will be another adjustment. that will take place, so that this amount of the accumulated impairment loss is the one that you write it off in here on the debit side, 4,250. Therefore, now let me come to the other side. Now I must not forget again the explanation of why we seem to be ignoring the impairment loss on the debit side and the depreciation account. Why are we not writing off those accounts? Therefore, now if let us say this asset was sold for 7,000 rands. Do you see now that it is sold at a price more than its value, more than its carrying amount? That will mean there will no longer be any impairment loss because we have not lost anything. We sold the asset at a price more than its carrying value, more than its carrying amount. Therefore, now that will mean this journal entry is out of the equation. It's not there because we sold this asset at 7,000 rands. So now that will mean we don't have accumulated impairment loss at all. But what are we going to have is a bank of 7,000 rands. Then what do we do with the difference? The difference will be a profit on the sale of an asset. Profit is income, and incomes increase on the credit side. So we are going to say 7,000 rands minus 6,250, which was the carrying amount. The difference of 750 will be on the credit side. It will be profit on sale of asset, or profit on derecognition or sale of an asset. Profit on sale of engine that was damaged. So that will be the difference that you need to take into account. And this is done at accounting 1 level under the asset disposal topic. Now let me erase the rest of this. Then it goes back to its normality where it was 6,250 and we had engine cost of 12,000 rands. With those words, now we have gotten rid of the old engine. We now need to buy the new engine. We need to buy the new engine. Now the new engine will be engine at cost, and the cost of the engine is 15,000 rands. If it was bought for cash, is bank. If it was bought on credit, it will be payables, and the amount is 15,000 rands. Now we need to calculate the depreciation of this engine for the 3 months it was in the business. Depreciation for the 3 months it was in the business. We credit accumulated depreciation for the engine, which is the new engine. Now if you want, you can have heading that says old engine and new engine. Let us look at the useful life of this new engine. And this new engine is depreciated on a straight line method over 3 years with a nil or zero residual value. So now that means we have to say an amount of 15,000 rands divided by 3 times by 3 months out of 12 months. That will be our new engine depreciation for the current year. 15,000 rands divided by 3 is 5,000 rands. Times by 3 divided by 12. It gives us 1,250. 1,250. Now I also want to calculate, this is not a requirement but important, carrying amount of the engine. Carrying amount of the engine at the end of the year. It's important to know the carrying amount. Carrying amount will be 15,000 rands minus 1,250. This will give us the carrying amount. So we'll have 1,250 minus 15,000 rands. It is 13,750. This is for the engine. I want also the carrying amount of the car body. Carrying amount of the car body is equal to 18,000 rands. If you remember when I calculated before, it was 20,000 rands minus depreciation of 2,000 rands. So that became 18,000 rands. So now the carrying amount of our asset, which is called a car, is equal to 13,000 plus 18,000 rands. I hope you understand why I'm using minus, because the signs are the same. 31,750. So now this is the carrying amount of the car body. Carrying amount of the car at 31st. Carrying amount of the car at 31st of December in the year 2001. Now remember, we normally calculate the carrying amount in the format of the property, plant and equipment note. That is very important, which is the disclosure part, how to disclose this in a note. But so far I'm just dealing with it at individual level. Then I think another recording after the next one will be focusing now on the disclosure of this to the property, plant and equipment note. With those words, thank you very much. Let me verify if I answered all that. Okay, the last part that I promised to explain is the depreciation, without me forgetting, is the depreciation. Remember, from an accounting point of view, at the end of the year, all expenses are written off to profit and loss. So this will be written off when we do closing entries. By the end of the year, we do closing entries, write off expenses to profit or loss account. So that is why we seem to be ignorant of this. It will be written off to profit or loss at the end of the year. It's not like we are not taking it into account. And number two, impairment loss is an expense. So now expenses will be written off to profit or loss, or statement of profit or loss at the end of the year, and they'll be transferred in there. So we don't write them off like we do when we recognize the asset, as we did in here. So with those words, guys, thank you. I hope you have learned something. If you have any question, please do not hesitate to ask for clarity. Thank you. God be with you.